I'm eating ice cream.
Jealous. I want some.
Yeah. Trying to
I
get
just
those
I,
gains on.
Yeah,
I
well,
just picked up some.
I'm trying to get them COVID gains off.
I
Them
know
Jeez.
that's
gains
right.
on. This is stock up season right now.
You know, I said the same thing, Marcus. I've been up here just writing, typing, and just stacking on pounds.
I'm happy you guys. Well, I'm packing on pounds too, but I don't want to be packing on pounds. I want to take off the pounds. I did the
My brother,
Buster. I did the
I
Buster
wish I could
challenge
share
on
these.
TikTok, and yeah, we can't do that no more.
All right. Well, ladies and gentlemen, let's welcome to tonight's lesson. We're gonna get started. Those will join us. They'll join us when they come in. If you
Okay.
guys happen to see somebody in the waiting room and I don't see them, just let me know. All right. We left off last time, but you know what? We're gonna run through real quick. I'm gonna start at the beginning, just jet through. I think this is just a refresher for you guys. Most of this you should already know from the last lessons. All right, so you guys remember the term Fair Credit Reporting Act, FCRA?
Yes.
This is the rule that governs one of the rules. There's about 4 of them. And they're all similar to this, but from different angles. But this is one of the main rules that governs credit reporting and what happens with your credit scores. So this was brought on because, as you guys know, before this rule came in, credit reporting was just crazy. People were just basically reporting whatever they wanted to, how they wanted to. There were no rules, no nothing. They were putting wrong stuff, you know, the whole nine. So when the Fair Credit Reporting Act came in, what it did was established a framework for fair information practices to protect privacy and promote accuracy in credit reporting. That's exactly what it does. It gives consumers the right to view, dispute, and correct their records. That's why we now have the ability to get copies of our credit reports. That's why they created the annualcreditreport.com sites to fit this model. Everything that we're talking about basically revolves around this act. It also governs financial institutions and what they can do and what they can and cannot put on our credit. So this act is what you're going to hear over and over again. All right, we know what's on a credit report. We went over that. Okay, what's not on your credit report: race, color, sex, national origin, marital status, political persuasion, medical bill details. Your medical bill may be on your credit report, but it will not give a diagnosis or anything of that nature. All right, we talked about that. We can move from that. That's the Vantage score. We talked about that. All right. So here's that one of those little fact sheets. This was back in 2010. In 2010, more than 43 million Americans had credit scores under 599, which puts you in the low score level, in the poor score level. All right, mortgage rates. Okay, how does credit scores affect things like your mortgage rate? Well, for instance, if you have a credit score of 700 plus, you're going to get a lower interest rate, lower monthly payments. The lower your credit score, the higher your interest, the higher your monthly payments. So for instance, if you were to look at it in dollars and cents, this chart right here is a perfect example of how your credit score is affected, how your credit score affects your payments, your interest rates, and so forth. So take a look at this, and you can see why people tend to refinance things like their homes and stuff like that. Because when you buy your home, let's say you bought it and you were at 640 when you bought it, and you're paying $1,700 a month for your mortgage. 2 years later, you find yourself with a credit score of 700. Well, they're going to come around to you because one, you've made a lot of payments to bring your overall balance down by now, and your credit score has gone up. So one of the good things that you can do for yourself would be to look for the best refinancing deal you can get and refinance to bring down your monthly payment as well as to save on interest. So that's why people tend to refinance. That's also one of the things that when you're talking to your clients, if your client owns a home or what else? What else would you think about refinancing for your clients? What are some of the things? Not just the home. How would we save our clients money? This is not a client that's not working. This client is working, they're making money, they just haven't figured out how to balance themselves. What would you do?
Auto.
Auto, exactly.
Automotive.
What else?
Find lower interest rates on credit cards.
Credit cards, any kind of loan instruments, because even if they don't have an auto loan, they could just have a personal bank loan. All those things can be refinanced when your credit score goes up. And that would be a good time to do it. All right. So we're going to get into this portion. I'm going to skip through this because we're going to cover this when we go into our homeowners portion, okay? But this is how you would qualify for your mortgage rates, which programs you would best fit into, the FHA program, all those things we'll discuss. I just don't want to confuse the conversation right now. All right, so the 4 C's of credit. All right, character, which is the history and what type of credit. Capacity, which is how much you have left on that credit line. Capital, the ability to absorb. What does that mean? Kenyatta, do you as an economist, do you understand the whole capital process, the ability to absorb?
No. If I had some extra language, a little bit more content, and it's interesting because I actually went through all of this as I'm putting down my groceries. I got to go back and look at my notes, but I'm sure once you explain a little bit more, I'm sure it'll come there. But as of now, it's not quite there. Mm-hmm.
Okay, so I'm going to add the word debt to the end of that. Now does anyone think they could make sense of it?
So how much? So all right. So if these companies are looking at the 4 C's to evaluate this particular potential person or cardholder or whatnot. So I would imagine is how many like how much debt you have out there, how much have you borrowed?
Right. And how much can you actually pay off? So in other words, if you're looking to take out a loan, I'm looking to see how much loan you already have out there, how many loans you already have out there, how much debt you already have out there. And you have, and now my calculation is, do you have the ability to absorb this debt and take on new debt? So that word absorb now says, do you have the ability to pay off your current debt and assume this new debt? Or better yet, can you now put this all into one debt and will you be able to still pay? So they want to know that you can absorb the current debt you have and make room for the new debt that you're asking for. That's when all these debt to income ratio come in, all these other things come in, and cash flow ratio, all that great stuff. All right, now we all know what collateral is. All right, so collateral is like when we're putting up a home as collateral or a car as collateral or an investment account as collateral. Well, collateral changes. Collateral tends to depreciate. Whatever the value of your car is today, it won't be the same tomorrow or next week or next year. So, and then investments depend on the market. So all those things are conditions of that loan process. Collateral has conditions and all that stuff. So they look at all those things in considering you for credit. All right. I'm gonna run through that, we know that. All right. Okay, this, all right, I'm gonna keep running, average credit card balance, keep running. All right, that clock, not worried about that. All right. Okay, you guys know who looks at your credit, right? Like what are the things that you do that generate pings on your credit? Of course, we know credit cards, store cards, auto loans, mortgages, personal loans, furniture loans, computer loans. We know all that stuff. But are you aware that your utility company pulls your credit report? When you sign up, when you move to a new apartment or house, and you register for new service through a new utility company, one of the things they do to decide if you have to make a payment, a deposit to them, is check your credit. Why do you think they do that? What are they actually looking for?
Payment history.
And well, there's something in particular that they're looking for.
Wait, what did you just ask? I missed that.
When your utility company runs, that's your credit score. What are they looking for?
Do you have any defaults in regards to the utility so that?
Exactly. And it's the same thing that your cell phone company looks for, the same thing your insurance carrier look for, and the banks. The bank have, okay, we're gonna get to the bank in a second. They're the last one, and I have something special to say about banks. So those things on the right, they all check your credit. Now, the thing I need to tell you about them is they check your credit, but unless you sign up for one of those special credit reporting programs where these things report every month, they only look at your credit twice. Once when they check it to give it to you, and the other time is if you owe them money and close out the account. Then they go back in one more time just to place a negative on your credit. Those are the only two times that those things will enter your credit, unless you join one of those programs where it's reported every month, because that's a new program they have out now where certain things can go towards, certain payments can go towards your credit. You just have to sign up. I wanted to tell you guys about banks. You guys, are you aware that banks have their own credit system?
No.
Yes. How many of you have ever been in a situation, hopefully it was when you were younger in your life, if you've ever been through it, it was younger in your life, let's say, when you may have gone to a bank to open up an account and was told you cannot open an account at this time, please call this number. And they gave you a phone number to a company called ChexSystems. No one experienced that?
No.
Okay, very good. I'm actually proud of you guys, because ChexSystems is the bank's credit reporting system. It's internal amongst banking institutions, so it's not something that even really appears on your credit. But whenever you go to a bank to open an account or make a loan, that's one of the systems that they check to see if you owe any bank any money, if you've had any legal actions taken against you by a bank for fraud or any of those things. They have a whole separate system in place for that. All right, keep that in mind. All right, so based on what we were just saying, remember what I just said about the accounts on the right, about how many times they hit your account, once to check it to see if they're going to give you credit, and the other time is only to damage your credit. It does not build your credit. It will never help building your credit, except if you join one of those programs that report every month to them. All right, Card Act. All right. Oh, I'm doing it. Oops, too fast, too fast. Okay. Earlier we talked about the various types of trade lines, right? So we said that credit cards were one type of trade lines called revolving accounts. Credit cards fall in that category. Home equity lines of credit falls in that category. Overdraft protection accounts fall in that category. The other trade line is installments. That's mortgage loans, auto loans, personal loans, student loans. All right. Now, the difference between the two is that they carry a different level of weight. What I mean by that is, depending on the loan that you or your client may want, you would not get it if you only had revolving trade lines. So if you wanted to take out a business loan for your company and you have a new company, that company has no credit of its own. So the people say, okay, well, we can go ahead and try to process your loan, but we're going to depend on your credit. And if you have good credit, let's say you have 700, but that 700 is based only off of 1 or 2 credit cards, and the maximum on that credit card is 1,000 or 2,500, and you're asking for a business loan of $50,000-$60,000, you would not get that loan because they do not see a trade line that says you can handle an installment loan. You have had no installment loans, so you don't have a history of managing an installment loan. So if your client wanted to get a home mortgage, for instance, and they only had credit cards and never owned a car, then they would have no history of an installment line. You would have a difficult time, not impossible time, but a difficult time, and it would be at a higher interest rate simply because they don't have an installment line of credit. Does that make sense?
Yeah.
Anybody with any questions on that?
No.
All right.
Sounds good.
All right. We talked about collections, we talked about charge-offs, and we talked about public records. So I think we can move past that. We talked about the 3 credit companies that's out there, the 3 official ones: Experian, Equifax, and TransUnion. All right, we talked about what make up your credit score. This is what percentage each of those items entail. All right, so we see that your payment history makes up 35%. Your payment amount, your amount owed rather, makes up 30%. So those two together is 65% of your credit score. Your payment history, meaning on-time payments, and the amount owed, which means keeping your monthly payments where you pay off up to 70% of what your credit limit is. Keep it under 70% to have the best impact. Then, of course, followed by length of credit history. Remember, we said how long you've actually had that account. So you might even have an installment account, but if you just got the installment account and it's less than 6 months or a year old, it doesn't have much weight to that lender as if when you pass a year, 2, or 3. All right. Oops. Okay. All right. Okay, this is just telling you about keeping your balances below that 30% threshold. All right. Okay. a lot of clients, a lot of clients that's desperate to get credit, they'll tend to go out and try to get it through Macy's or Victoria's Secrets and so on and so forth. That is like the worst way to try to establish credit. It would be better for you to instruct your clients rather than going that route to do a secured credit card. Why would it be a better advice to tell your clients to do a secure credit card as opposed to Victoria's Secrets or a Macy's card? What would be the difference in your advice? Why would you tell them one versus the other? Brother Kenyatta, you want to try it?
Well, two things. One, generally speaking, credit cards usually have a larger capacity. So if you are able to handle that responsibly, it shows that you're able to handle more credit responsibly. And then two, charge cards are usually, I mean, for the most part, they are store-based versus a credit card. You have, more flexibility. So there again, you're showing more responsibility. That's my guess at it.
Perfect. There's only one other thing I would add to that. Anybody can think of that last little thing?
Yeah, I could help out. So what those store credit cards, they don't directly affect the 3 credit bureaus. So they won't help you push the credit score higher at a certain, starting that kind of credit. That when they look at that, they're looking at something that was directly reflecting from those 3 credit bureaus. So those are the kind of credit cards you're trying to obtain.
Okay, perfect. And the last thing I would also add to that is those store credit cards always start at the maximum interest rate, which is usually 27, 28, 29%. All right.
I was gonna say, Brother Andy, I just finished listening to this audio book called Credit Card Millionaire.
Yes.
And it's I enjoyed the book. I actually took the book and broke down like everything, like the whole, like his whole methodology, his whole thing. And so I think that was Brother Dion who just made the point about not reporting to the major bureaus, when really charge cards, although they may not be as, like hold the same degree of respect in terms of like the, like the 3 credit bureaus, they do report though. Like those charge cards do, they do report to those bureaus,
Absolutely.
Yeah.
Absolutely. They are going to report. Now, like all creditors, they have a choice of 3. Not everybody will report to every one, but they're going to definitely report to one to 2.
Okay.
Now, this right here is super important.
Hold on. I'm sorry. I don't want you to go further. Hold tight before you go back. So let's go back and reinstate that point one more time. So the reason we would not encourage our clients to go the charge card route versus the secure credit card route. The point that you made on that one more time. Can you give it back to me one more time?
The last point or all of them?
No. The point
was that they're always at the maximum percentage rate, APR.
Higher interest rates. Okay.
Higher interest rate, yes. Always at the maximum, which is like 29, 28.
Okay, so I see why that's not a good thing for the client in terms of them paying more, right? You're an advocate for the client. I get that.
Absolutely. And the other thing you said, which was the number one thing, which was you are limited to where you can use that card. It cannot
Mm-hmm.
help you in a situation. It cannot help you in a real emergency. It can't help you when you need cash. It can't help you if you need to eat. It can't help you to fix your car. None of that stuff.
Right. Mm-hmm. Mm-hmm. Mm-hmm.
So those two things, the fact that it can't really help you and the fact that you're paying more for something that doesn't help you.
I did. Overstood. Let's go. I got you. Mm-hmm.
Okay. So now this right here is what we were looking at and I was trying to get this timeline. So this page right here outlines your timeline for action on your credit or your client's credit based on what their actions are. So I want us to go through this. This is where I want us to start today. So Marcus,
Yes.
can you attack row that says 0 to 60 days past due? This is what happens when your client is at day 0 to 60 past due. When does day 0 start?
0 starts when you miss your first payment. Is that correct?
Well, 0 starts, it could start on any payment, but it's when you miss that payment due date and go past the grace period as well. That
Okay.
that first day past your due date, day 1 past your due date is day 0.
Nice. Yeah.
Okay.
So they give you the grace period, and then that would be like the next 30 days or 2 months, really. I think they usually do that.
Well, read straight down 0 to 60 and you'll see what happens.
Okay. Notice of late. You want me to read it out loud?
Yes, please.
Okay. Notice 0 to 60 days past due. Notice of late. Payments letters are sent. Customers telephone for immediate arrangement. Typically 1 day is allowed after leaving message for customer before follow-up phone call. Initial derogatory report made to credit bureaus at day 31 of delinquency.
Okay.
Rate increase for default. Late fees added to balance.
Yep. So right there, 0 to 60. By the end of 60, you've already moved up on your, you know, that score on the far right where I said 9 was the worst and 1 was the best?
Yep.
You've now moved up to a 2.
Okay, hold on, brother Andy, hold on. Okay, so I am putting this together with what we talked about in the last class.
Yep.
And and I'm noticing the number 90 is not in this timeline.
Nope.
Now, 90 was when we said, I think it was like wasn't it like day 91 is when you're sent to collections? Is that correct?
Yes. And you know why for us it's 90?
Mm-hmm.
Because
no, I don't. Mm-mm.
Because they're giving their next report is not for until the next 30 days. So your negative balance won't hit for that next 30 days. They don't count that. We count it for our clients.
Okay.
So
all right.
if you look right here, right, it says notice of late payment letters are sent, right?
Yep.
So you've already gone past your grace period, which is usually 9 days or 10 days. There's usually a 10-day grace period, right? Then after that 10 days, they're calling you, they're sending you letters, right? Then your phone is ringing off the hook. And at the end of that first 30 days, you have a chance to still have excellent credit. You can still fix that without a blemish. Even though you're late and everything else, you moved up to a 2, that's okay, but you can still save it without a blemish. If you were to pay it before that 29th day, let's say, when that 30-day hits, now you're in that 60-day zone. because by that time, you are now, your initial derogatory report is made at day 31. You see that?
Mm-hmm.
So you're already 31 days delinquent. Their clock starts. So the first 30 days, you can fix that, but their clocks start after that. After they've given you every chance to fix it, they've given you that first 30 days and all that 10-day grace period out of that, all of that. But from day one of your client missing her late payment, if it says her payment date is the 25th, you have to start counting day one from the 26th. But they're not.
Mm.
So my count says 90, theirs says 60. Because by the time my client gets to their 60, they're truly at 90. And then they're gonna add that back 30 days on when they make the second derogatory report, because it's gonna say now you're 60 days, which means you didn't pay 30 and you didn't catch up to it at 30. So now you got the 30 hit, you got the 60 currently hit, and you're heading for 90.
So we're basically trying to be ahead of the clock, their clock.
Exactly. You have to stay 30 days ahead of their clock in order to try to help your client fix and save this account.
Mm.
All right. It's Fern. Fern. Fern with us? Fern, take a break. Wait, I don't even see Fern. Okay, Keisha,
Yes.
you want to do 60 to 120?
Okay. I can't read because I'm driving. So
Oh,
is
you're
it something
driving.
that you want me? Yes. Is it something you want me to verbally say?
Okay,
I can't
so
read
yeah,
anything,
all right. So I'm gonna read it and then you just comment. All right.
Okay.
All right. So at 60 to 120 days past due, advanced delinquency procedures begin. Accounts closed or credit lines suspended. Okay. So now you see where it said 60 to 120, right? If we were counting by their clock, that's at 60. But if we're counting by our clock, what should that be?
30.
90.
Isn't it 90? It's
Yeah,
90.
Yes.
90.
Yes. Because remember, we are 30 days ahead of all of this stuff.
Right. Right.
So at 90 days by our clock, all this stuff is going on with our client. From day one of them missing that payment, by the time 90 days hit, they're saying it's 60, but it's truly 90. Because they would not close your account at 60 days.
They want to still be able to recoup that money.
Absolutely.
Yeah, with an even bigger grace period. I believe that. Yep.
Yep. So once you hit 90, that's when you're at the bottom. You see here where it says, even if account is brought current, creditor may refuse to reopen the line of credit. All right, because remember I said, come 91 days, it's over. You can't save it. So this is now 91 to 120. That's literally a dead account. So in their head, they're saying over 120. Kenyatta, if you see that, can you see the over 120 days past due?
Yep.
Okay. So what's going to happen when you hit that 120?
You're going to go to the ongoing derogatory reporting. Balance is accelerated and payable in full.
In full. Okay, so when you call now and try to make good on that account, they're going to say, well, I'm sorry, sir, we can't accept any payments from you. The only thing we can do is have you pay this account off.
Right. Mm-hmm.
Okay, and then you're going to say, well, if I pay it off, will you then open the account back up? and they're going to say, no, the account is already closed and we can't reopen the account. Then you're going to say, well, if I pay it in full, will you then remove it from my credit? And that original creditor, if it's the original creditor, will say, well, no, that's not something I can do because we've already closed the account on our books and moved it into collection.
900 feet, turn right
You
to
now-
I-75 north.
You now have to contact our collections department. You see that? And then you're going to say, well, can I have the number to that collections department? It's one of two things that can happen. They can say, here's the number. However, you need to give it another 30 days for it to get there because they haven't transferred it yet. Or you can call and it's already in collections. So that's the timeline. And this is a great thing to have and to kind of get that timeline down. But accelerate this by 30 days and do everything by 30. So days 0 through 30, that's the frantic time when the clients are frantic because they know that they're messing up their credit, but also the creditor is frantically trying to get the client to save that account. They don't want to lose that account. They want to keep making money on it. And what's the best account for a creditor? Is it the one that pays off every month or the one that always leave a big ass balance but pays the minimum at least?
The latter.
Exactly. They don't want you to pay off your account. It makes them no money when you pay off your account in full. They make no money. They're basically just giving you a free loan. So they want that person. They want that person to keep making those small monthly payments. They love to keep her or him. All right. All right, let's run through all of this. This is just little notes, cost of credit, auto. I think we could be done with this. We talked about all this stuff.
So this
Okay.
is basically for personal credit, right? Or this is
This
not,
is-
is this basically for business credit?
No,
Business
this
credit
is personal.
Okay.
Okay, so now, this is what I wanted to get to. You remember we had the live client, right? The client that we interviewed recently,
Right.
and we saw that she had 10 credit cards or 10 credit accounts. So
Right.
on the first step in servicing your clients, all right, credit cards is always the easiest. So the first thing that we do in servicing our client, well, the first thing we do is review the credit. Interview, review the credit, meaning you pull it and so forth. After you talk to the client and then show them how bad or how good or whatever they thought it wasn't. Then the first wave of action that you take is the letter stage. You don't need to make any phone calls, and the law states that this letter is sufficient enough notice to all creditors that they must act accordingly as per this letter. Okay, that's the law, and that's a federal law. Why do I separate federal laws versus state and so forth? Because that means it goes for every state, every collection agency, anywhere. So the first thing we do, and okay, so now I'm going to back it all up before I even go here. Now, ladies and gentlemen, we're now going to enter how all of this equals money for us, right? As a credit repair specialist, right? Let's say that's your title. How does all this equal money for us? Well, the money process for you guys as credit repair specialists is this. And you can write it down, or you'll get it later on after we finish the courses, because all of you guys will be ready for it then. But your money situation is this. The first fee that you take from a client is the intake fee, right? Because you have to pull reports, you have to analyze it, you have to figure out which way it's going to go, and then you have to report back to the client. So to do that, it's going to take time, and you want to be compensated for your time. So the way that we do it, we charge our clients $150 for the intake. From that, 100 goes to you right off the top. Okay? That first 100 is simply for you to do the following. Talk to the client, do the intake interview, pull the credit report, review the credit report, and then list one action next to each credit line that you would take for that client. Then you would create your spreadsheet, put that client on the spreadsheet, the date of the reviews, each action you take, you list the date, what you did. That's it. Okay. So how do you make that first $100? Like I said, you register the client, you do the intake. You don't do any of that, of course, until well, the intake comes first. You do the intake usually, and then they make the payment, because it just seems to put them at ease after they do the intake to make the payment. I don't like to ask for the payment before the intake, because usually you want to know what you're getting before you put your money out, right? So that's what you do. You do the intake, and then you let them know there's a fee for me to pull your report, create your file, and then start to begin the process. Your process is, after you pull the report, no matter what, your first action is always this letter. Okay, you will have a copy of, well, you have it already. This letter, I recommend that you put it on your computer, you save it as action 1, however you want to save it, and you simply substitute the client's name, address, phone number, and then you write the letter accordingly. What I will say is, do not ever, ever, ever put a client's full social security number on any document, no matter who it's going to. You put XX, XXXX, and then the last 4 digits of their social. That's how you do it. Okay. So this letter here, you send it. I will also provide you with company letterheads, because as a financial nonprofit, they will respond to you faster and give you more action, because they know that this is your job to pay attention to these things. So we'll give you letterheads, you'll send it out. I'm gonna make it easier for you. What I've done, and what I've always done, I don't mail them unless they just don't have an email address. So I will still complete the letter as is, and then I will send it to them via email. Hence, the reason why I kind of create an email that I manage for each client. I don't want to have to call the client and ask them to check their email and forward it to me, and so I manage it for them. They keep their own email separate. I create one just to handle their debts. After I'm done with them, and if they don't want to continue with us after we do what we do, that's fine. I then give them control of that email for them to decide whether they want to continue to manage it, or if they want to discard it. That's up to them. But if they want to stay with us as continued members, we will continue to monitor and surveil that email, but at a monthly fee. Okay. So the next set of monies for you comes month at the day 31 forward. Why day 31 forward? Day 31 after you send this letter. Okay, so let me be specific. Day 31 after you send this letter. Why? Because the law says that credit agencies have 30 days in which to respond. However, it's 30 days from receiving the letter. So we must adjust our 30-day count by, I guess, 4 or 5 days for them to receive the letter. And they will have a postmark on that letter telling them when that 30-day begins. So they will then send you a response. What I normally do is to keep the client in the loop. That's when I put the client's address on this letter, because I want that letter to go to the client. So the client looks for the letter and then scans it or takes a picture of it, sends it to me, and I respond to the letter accordingly. Okay, I like to keep the client involved because it commits them to the actions and they know that you're working on their behalf. They're there to celebrate those small milestones with you. Even of getting a letter, even getting a response is a milestone for them, because it was something that was planned, something that you told them to expect, and it occurred and it happened, and now let's move on to the next phase. To them, that's a breakthrough. It's more than they've been getting. So they're going to celebrate that. All right. In your own unique way, you'll find ways to celebrate with your client. So, you know, I make them laugh, I crack them up, I say the wildest things to them, depending on who they are and what I've already gathered about them. You can usually tell who you can say what to by the interview, because they're going to let themselves go during that interview and start, you know, like that lady, she was cracking up. She was, you know, having fun with us. So most of your interviews will be that way. I will not say all. There's some that's like nervous as heck. There's some that's strictly business. There's some, you know, you will know who to be what with. Know that you have to make that client feel comfortable. So rather than you changing that client abruptly, you might have to go over to that client's serious side and bring them to the relaxed side if that's where you're more comfortable. But you start where they are. All right. But this letter here, if we read it, it's let's say it's to it's always going to be to the collection agency. Okay, this is always to the collection agency. Now, this is not actually the letter that I'm going to give you guys to use. I have a series of legal letters that we use. This letter is just a sample of what they put in this material. But the letter, in fact, let me show you our letter.
Brother Andy, while you're looking up the letter, got a question for you.
Yes.
So I would imagine, like, once we go through a client's credit report, we'll know which credit bureaus are holding on to. So, for example, all debts or things that are charged. Well, that's a good question. So if it appears on your credit report, does it necessarily mean that all credit bureaus that is registered with all credit bureaus?
Nope.
Okay.
Nope.
Right.
Reason,
so that means that.
Go ahead.
So and I'm sort of drawing a blank a little bit. But we should be able to identify which credit bureaus are holding on to or has registered which debts.
Absolutely.
And so then this letter that we're in discussion on, I would imagine that we will send it to the ones that pertain to like, are we being debt specific, or we just send them to all three?
No, we everything we do, we blanket. We send it to all three, whether they have that debt or not. Because what happens is we can dispute it with one credit bureau and it triggers it to the other credit bureau. You know what I mean? So we want to make sure that even if it got it after the fact, it got it late, whatever they got it, whenever they got it, we also want them to have a letter on file that that's being disputed.
And I would imagine it's more efficient that way anyway, right? Just hit all
Absolutely.
three versus like trying to, you know,
Figure out who's got what particular. No, just blanket all of them. All right,
Overstood.
so,
Got it.
So this document is one that I created, and I've been using it for the last several years. And I did this when I started kind of teaching this course a bit, because this is I call it a result-driven letter, right? So each letter is to achieve a particular result. Like letter 1, letter to order your credit report by mail, letter of dispute for collections and charge-offs or other inaccurate information, debt validation letter, follow-up letters, all right, letters to stop harassment, letter of complaint for the credit bureau, letter to dispute inquiries on your client's reports, all those things. All right, so as you scroll down that document, this first letter, this is if you wanted to order a free credit report for your client by mail. Let's say you couldn't access it. If somebody had trouble last time accessing, I think it was Jillian, had trouble accessing by mail, online, and had to do it by mail. So if you had to do the same for your client, you would simply complete this letter with their name, address, and so forth. And now that we're in computer age, you could literally just go to Google Doc Hub and sign it and send it with a computer signature. All right, so everything will be right there for you. This next letter, see it tells you at the top, use this letter, debt validation to dispute collections and charge off with the collection company, right? Not the credit bureaus, because that's not who you want to go to first. When there's something on your client's credit report, the credit bureaus are not going to just remove it based on your request. They will remove it, however, based on the credit collection company's request. So that means you have to first contact the credit collection agency and have them make the action to remove the debt. So how do you get them to do that? This letter. This is a debt validation letter. This letter is, I'm gonna show you the difference between that and the other one. Take a look just by its construction. All right.
I'm sorry, and all I see is a sample dispute letter.
Okay. You should see it says my credit report shows a collection from your agency.
No, it's a sample dispute letter. I am.
Oh, okay. You know what? When I changed the page, maybe it didn't.
I thought it was just me. Good call, brother. Is that Brother Dion? Oh, Marcus. Good call, Brother Marcus. Right. Yeah, I was like,
why don't
I was like,
say
man,
something,
am I missing something? Right.
I also had another question. Well, about like how to do a synopsis of when do you like kind of get a loan for somebody to like kind of pay off all their credit cards.
That consolidation.
Yeah.
Okay, we're gonna get there. That's at the end of all of this, because to be able to do that, that's like all the other boxes got to be checked, right? Because remember, a debt consolidation is a loan, right?
Yeah.
So this is the catch-22 about a debt consolidation. Usually, a person doesn't go to get a debt consolidation until they're in debt, right?
Right. Mm-hmm.
But if you're in debt, chances are you've already had a number of things happen to reduce your credit score.
Right.
And now you're going for a debt consolidation, which is a loan, which requires you to have a good credit score.
Right. That should bring back the whole credit score back up, and then you could bring up.
Yeah, but the problem is, you may not get the debt consolidation loan because your credit score is already too low and you already have late payments and all this stuff on your credit. So now the creditor that's looking to give you that loan is saying, but I can't give it to you because your credit score is not good enough and you have late payments and all this stuff. But that's the reason I'm here. And that goes back to the rule of saying, if you want to borrow money, you cannot borrow money when you're in debt.
Right.
Okay.
So how do you make that work? I mean, I hear that.
You make
how
it
do you
work as a financial counselor. You make it work by putting in some quick fixes. You say, okay, you need to bring this up to payment. Can we do a budget to pay this week, this next week, this amount on this one, this amount on that one, and then by the next credit cycle, your score is going to jump this amount. Then we do this, that, and the other. And 60 days now, you should be up to here, and then we
I
go
get
for the
you.
loan.
Oh, I get you. I get what you're saying. Yeah. Okay, I follow.
All right, you got to build them right back up, just enough to pass over that loan requirement, and
Right,
then
they gotta
the
make
loan.
make some kind of commitment to
Yes.
that, to paying off all that stuff to get that consolidation.
Yes.
Cool.
Because unfortunately, a debt consolidation is still a loan.
Nice.
All right. And now you guys seeing this letter?
Yes.
Okay. So this letter is the first letter that you would send out to the collection agency, right? So you would put the date, the address, all that stuff, but this is what's important is the body. Their collection agency, my credit report shows a collection from your agency. I was never notified of this collection. What's more, I do not believe this debt is accurate. Notice that statement. You must claim that you are not aware or in agreement of this debt. Okay, so hence the statement, I was never notified of this collection. What's more, I do not believe this debt is accurate. That simply means either it's not my debt, I don't know you, I don't know the amount, or I don't know what you're talking about, right? Under the Fair Debt Collection Protection Act, I have the right to request and receive validation of the debt. Therefore, please provide me with a copy of all of the following. Okay? And then it's laid out what you must have. These are the things that they will not be able to produce unless they are the legal owners of that debt. Remember we had that conversation? Okay. The reason we wait for debts to move up to collection is why?
We can handle it from there.
Okay, but why?
Because you would have to go wait the 30-day period or something like that after it's sent from the creditor to the what's it called, department.
Okay. Well, the reason, let me make it simple for you.
Hold on, I want to take a stab at it. Let me take a stab at it.
Yeah, please go right ahead, Brother Kenyatta.
Let me take a stab at it. I remember in the last class, it was something to the effect that so really, like, is it day 60? Like once it's like already like somewhere between 30 and 60, you they don't really get any gains for trying to pay whatever. They've already kind of like been deemed as like irresponsible, and it's not until after day 90, like after, like, because we were talking about, what was that, the charge off and then charge off and collections,
right?
And you want to wait until you hit the charge off and collections, because then at that point, oh, there we go. So once it hits collections, now we got something to actually like, I guess you could say, fight for.
Yep.
You know, in terms of the client. Prior to that phase, if it hadn't quite made it to collections, it's almost like what are you asking? You know, it's like
Yeah, basically.
yeah,
Yep,
so something
yep.
to that effect. Yeah.
Yeah, no, I totally understand what you're saying. Yes, you're right. To explain it to everyone else, what he's saying is up until day 90, you can still fight to save the account with the original creditor, right? If you come into some money, whatever it is, you can technically say, hey, I made it just in time to pay it all off. Can I save the account? And they might say, yes. If you pay it all now today, we will reopen the account. Okay, so up until that time, you can still save the account. Once it passes that point and it's closed, the account is closed, charged off, then we simply can't do anything because it's in limbo. They've already closed it. They're not even accepting payments on it on the original creditor side. They can't even discuss the account with you. It's closed, it's dead. All right, you now have to wait till it gets to collection, because in collections, it's one of two things. It's in either an in-house collection or a third-party collection. The ones that we go after first and foremost is the third-party collectors.
Yeah, I figured that.
Okay, those are our targets. So that's why we wait for them to move up into that category of that third-party collection, which is the top tier. Those are the ones that just batters your credit report. The ones that's closed and sitting in the original creditors closed files and maybe in their original creditors collection office, which is in-house, those accounts are a little bit more difficult to deal with, because guess what? You're still dealing with the original creditor. And when you send them this letter, when you send an original creditor this letter makes no sense to send to the original creditor. Why?
Well, if it's still with the original creditor, isn't it possible that it hadn't even quite made it to the credit bureaus just yet?
Well, it's already charged off, so it's definitely admitted to the
Okay.
credit
All
bureau.
right, it did make it to the credit bureau.
Yeah, but why does sending them this demand letter for, you're asking the original creditor to send them an explanation of the account balance. Do you think the original creditor will have every detail of your account
Yes.
balance? Absolutely. So he's going to provide you with that. Then number two, ask him, give me a calculation of the balance, including the complete payment history on this account. Do you think that the original creditor will have a complete payment history?
Yes.
Yes, and he's going to send you that. Then you're asking for documentations that show I agree to pay this debt, which is a signature page, or are you asking for the credit card? Do you think the original creditor has that?
Yes.
Absolutely. So everything that you're asking for in this letter, the original creditor will provide you with.
Oh, okay. I think I see what you're saying. You're saying that so in this game of chess, that's a bad thing. Right.
That's exactly right.
Right. We want them to not have something, because then now we got grounds to dispute. I got you. All right, I'm with you. All right, overstood. Got it.
Okay. The light is there now. The light is on.
Got it. Because if you missing any one of these five, now we got grounds for dispute, and we have a good chance of actually having it removed.
Exactly. We don't want them to have any of these, in fact.
Okay. All right. Okay.
Now you got it.
I see.
Yeah, it's not good to answer any information that's not asked for.
That's right. And that's one of the reasons why we tell creditors and not creditors, tell our clients not to respond to telephone calls. Do not answer questions.
Right.
Do not verify your social security number. Do not verify your address. Don't verify where you work. None of that stuff, because now they can enter that into the files and say, well, you acknowledge the debt. Look, well, you told us you worked here. You told us this, you know.
I see.
All right. So that's the first letter that we send to the third-party collection agencies. This is a legal letter. This forces them to action. And if they cannot produce these documents, it tells them they no longer have the right to collect on this debt, and they must now remove it. That is the next letter that you would send after the 31st day, is calling for removal. Because once you send this letter asking for these things, you must, by law, give them 30 days to receive a response. You cannot send another letter prior to that 30-day window.
Mm.
Okay? It will be null and void.
So it seems like, so like, Brother Andy, just curious, and I know that people are different. So, you know, it's kind of hard to say, you know, how people, you know, like how credit specialists will work. But it seemed like after kind of doing this, you know, a few times, I don't know, let's just say 10, 20 times or something like that. Like there'll almost be like a mechanical.
It is.
Like you can almost tell from the rip, like, okay,
Yep, absolutely.
boom, we're gonna take these steps, and boom.
Yep.
It becomes
And after a while,
mechanical.
you're going to be able to simply talk to your client, look at their credit, and basically be able to tell them what you're going to do within what timeline, what's going to happen, and when it's going to happen, and how it's going to happen. You literally be able to tell them that, but you won't tell them that. You know why? Because you've already moved on to the second level with your client. In your head, you've already said to yourself, shit, I could clear that shit up with no problem. But this client also mentioned to me that they're thinking of their own business. How do I now make the transition with their credit and my client into their own business? Let me start exploring the business part of it while I know what these steps are going to be taken in the coming days. So you already have your next project that you're working on with your client, which is building their credit up to maybe take out that business loan to jumpstart their credit, their business, which, by the way, is worth, what, 2% to you? You know, so if they're taking out a $60,000 loan and you're clearing 2% of that 60,000, how much did you just make?
Right, 2% of 60,000.
Yes.
Nice. So not 600, but 1,200. Is that correct?
That's correct. Yep.
I got two off record questions. You know, two off record questions. My first question is, now I know that we're in COVID, you know, and we're, you know, right now we're in a virtual kind of a way of handling a lot of business and so forth. Do you think we will be able to provide this service like before the economy totally opens up? Or do you think like for us, we might have to train for a year or something? Like, what do you think?
There's people dying for this service right now. Right now, you'd be amazed. People right now are so confused about their finances. They don't know whether to invest, whether to bury it under a rock, whether to buy property, whether to stay in their apartment, whether to keep their kid in private school, to pull them out and send them to public. People are so confused right now. This is the time where they need you more than when things are good. Trust me, they need you more now. Because just a simple thing as okay, I'm home, my kids are home, my wife is home, I'm working, she's working, but I'm going freaking stir crazy. You know, what can I do if I wanted to add space to my house, or if I wanted to get another office space to work in, but it's COVID time? These are all questions that come down to one thing, and that's budgeting and money. You know, because if they own their home, then it's a matter of do you have space that you just need to build out, or do you need space that you have to build on? And if you need to build on, how much is that budget? If you need to build out, how much is that budget? All that stuff, you know. And for me, once they're off the level one, which is their credit, once their credit is done, and I got to finish telling you the pay structure on the credit, because after we go through their credit, and depending on what's on it, each line item that we remove, we do a dollar value for. You know, you follow me?
Indeed.
So if it's, and most of them, you're gonna wipe out most of them with the first letter. The first letter is gonna wipe out a good number of them. The ones that these companies just don't have information, they tend to just remove them. But let me tell you what they do. Let's say ABC company has the debt, right? We send a letter to ABC company. ABC company says, oh crap, they got us. We don't have nothing. What do you think ABC company is going to do?
Right. They're going to go ahead and remove.
Yeah. But do you think they're just going to take a loss?
No.
What do you think they're going to do? Anybody?
Collect.
Anybody? If we fought a debt with creditor A, what do they do with that debt when they know they can't win?
They allow you to make the payment, and then
no, they've already determined that they're not going to be paid by you because you know the law. You got a company on your side that's helping you fight the case, and they know they have no documents on you. So they are not collecting that debt from you. They might even go
They'll
ahead.
write it off.
They will write it off, but they do one thing,
Right.
one other thing after they write it off. Go ahead.
Can they sell it?
Absolutely. Absolutely.
Yeah.
It will appear again on your client's report 4 or 6 months later under a new company.
Yep.
Okay. So guess what's going to happen? Your client's going to come back to you and says, hey, I thought we got rid of that. And you're going to say, okay, let me look at my reports. Yes, we did get rid of it with collection agency A. However, they sold it to collection agency B now. Unfortunately, that's a totally separate company and it's a totally separate case, which means now whatever the fee was for that line item, we now have to do it for company B. You're not doing nothing, you're not boosting them up. You're not charging them more for no services. You're charging them for another line item, which is another brand new line item, which you have no control over. But if you're gonna do the work, you should be compensated for that work. See, but that's where we come in. That's where you allow the company to register your clients, so you're not the bad guy that have to ask for the money. You allow them to go to the website and register on the website, which is going to ask for their payment, or they could call in and I'll register them for you, or by that time, Fern or somebody else will connect people to register people. But there's going to be a system where all the clients will be registered for you. Your monies will be collected for you. And then when you give the report to your clients as to what's on their credit report, it's also going to be a price tag attached to each line item. And it's not going to be no crazy price tag. It might be $50 for this, $100 for that, but it'll add up to maybe, if they got 10 items, it might be $500 to $1,000, depending on the item. And they pay that off line item by line item. And now you have a monthly revenue coming in from your clients where you're hitting one line item a month. Once you get rid of that one or send the letter out on that one, if they're ready for the next one, you attack that one. But those are only line items that are left over after your first wave of letters go out. That courtesy wave of letter is going to take care of quite a few, which is why you get that first 150 up front from the client to cover that first wave. Then after that, you get for each line item that you have to individually address. Does that make sense?
Mm-hmm. Yep.
So you see how your money steamrolls, right?
Mm-hmm. Yep. Mm-hmm.
All right. And the best part about it is the actions become mechanical. You have the letters, form letters, you know what to do, you know what to press. You got your list of credit companies with their emails preferably, or their fax numbers. All right. You can, if you have a computer, you can send free fax to these companies. You don't have to pay for fax. You can send a fax right from your email. Okay, I can show you guys how to do that if you don't know how to do it. Fax Zero, you guys familiar with that?
No.
If you have a fax that you need to send, scan it into your computer and then go to the website, www.faxzero.com, and follow the instructions on how to send your fax for free. You can send up to 3 pages locally, anywhere in the country. All right, now this letter here, the one that's been in front of you for a minute, you guys can see it says number 3. Is that what's in front of you guys? Number 3, letter to Credit Bureau.
Yes, sir.
All right. So once you've sent letter 1 and 30 days have passed, right?
Yeah.
You're going to send out 2 more letters. One letter is again to the creditor, which is the people they owe. And the other letter is to the credit reporting agency, the credit bureaus. This letter I want to show you is to the credit bureaus, because you're going to send one to the creditor saying, you didn't respond to me and you didn't provide me with what I asked for. You did not have anything in your files that prove that this debt belonged to my client, right? That's the letter you're going to send them. This letter you're sending to the credit bureau. This letter is from the client saying, I am disputing the account stated above. Previously, I disputed the account as being inaccurate. You responded by stating you were able to verify this debt, but how is that possible? Under the laws of the FDCPA, I have contacted the collection agency, named the agency myself, and they have failed to verify that this is indeed my debt. All right, I enclosed, oh, don't move so fast. I enclose copies of my request to the collection agency, asking them to validate the debt, as well as the receipt showing I sent this letter by certified signature request. I was given no evidence of my obligation to pay this debt to the collection agency. This is not mine. So you're gonna now attach this to a copy of the first letter that you sent to the creditor, right? If the creditor sent a response back, usually it's some fluff stuff that they send and it's nothing that you asked for. You can attach copies of that and say, this was the response I got. That's what you're going to send to the credit reporting agencies, because they are then going to launch an investigation of their own. They are going to contact the same creditor you just contacted. And now if those creditors don't respond to them in 30 days, that's when they can move into action and remove that dispute for you. That is the only way the credit reporting agency will take any actions on your behalf, is if you can prove that you've taken those steps to removing that item and they have not responded to your satisfaction. Does that make sense?
Yes, sir. Yes, sir.
All right.
So I'm starting to just kind of see all of this right here. The Fair Credit Reporting Act. So I don't know, like, do you have to be registered or licensed or something? Because basically we're taking on these creditors via the credit reporting agencies. And it's like, you know, I would imagine, I don't know, is there some type of like, you know, like will cover me, like be licensed or, you know, like get some kind of certification or something to be able to do this kind of work? Yes.
That's why I'm saying to register the clients through the company, so that way we will be the guiding agency for you guys. You guys will all be under us.
Mm-hmm. Yep, I see. Mm-hmm. I mean, I assume that, but I'm just saying, you know.
Okay, excellent, excellent. Okay, so now this letter, there's a letter, like I said, that we could continue with letters. There's a letter for everything. This is just to stop them from harassing you, but this isn't necessary, because when you send them that letter number 1, inside of letter number 1, the last line asks them to stop contacting you except by mail. All right, I'm just gonna run through a couple of letters. I'm gonna see what's interesting. Letter, complaint, follow up to the credit bureau who did not respond. See, there's letters even threatening the credit bureau. Look at that. Notice the file and intent to file complaint.
I see it with the Federal Trade Commission, right?
Yes. Yes.
Oh boy.
Yep.
Okay.
All right, so I'm gonna send you guys later on. I'm gonna send you guys this whole connection of letters, and then you guys will know which letter goes to which by the heading. The heading outlines the use of each letter, so you guys will have a nice little arsenal of letters to use, whether it's for your personal credit, but more so for your client's credit. All right. All right. So let's go back to our. So we're done with that booklet, guys. All right.
So Andy, I have a question.
Yes.
Andy.
Yes, I'm here.
So the initial intake form of 150, 100 goes to us and 50 goes to cover me. Is that correct?
Correct.
Okay, gotcha.
All
Now,
right.
Sorry, guys. I just got distracted over here. That's why.
Uh-huh.
Yep. Kids. Sorry.
Was there a question, Kenyatta?
Yeah, I did have a question. So how soon in the future, and not that I'm all good with education, like I'm that's what I do as an academic, like but just curious, like according to your vision, how soon do you see us being able to provide this service to people who need it?
Well, we're finishing up this part on the individual servicing.
Mm-hmm.
And then I wanted to go into business servicing because that's where most of your larger dollar amounts are.
Mm-hmm. Mm-hmm.
So that's what I want to get into next, right?
Mm-hmm.
That program is going to be very simple for you guys because most of the work is going to be done internally, but with a team of people that we're already going to have in place to do the work. Our work is going to be to gather the information from those clients. That's going to be our work. So for instance, when it comes to dealing with our business customers, most of our business customers are looking for funding, right?
Yep.
So they come to us, they say, okay, we need 50, 60,000. We say to them, okay, that's no problem. This is what I need from you. Your last payroll, your last expenses, your last 3 months bank account, your last 2 years taxes. It's easier to say it than it is to get it. Okay. So imagine now this is your client. They want 60,000. You know you could get it for them if they give you those documents. Your job is going to be call them up every day. Say, hey, bro, you want the 60 grand or not? You need me to come and pick it up? You need me to get an accountant to do your taxes for you? What is it you need? Whatever they need, that's where we say, okay, you need your taxes done. I got somebody to do your taxes. It's going to cost you X, Y, Z. Anything that you take money from, you get a piece of. Money does not transfer and piece of it doesn't stay with you. So if they say they need taxes, if they need their personal taxes, business people, their personal taxes, we start at $250. If it's somebody with a W-2, we start at $150. All right. And it's the same breakdown. If it's the individual at $150, you get $100. Okay. So we're trying to make money for you guys. Now I gotta check that. I think I just made a mistake. I got something written down on the taxes. 100, 150. Oh, it's 75.75 on the taxes. Yeah, individual taxes. 75.75 on business taxes. It's 150 to you, 150 to the company, 100 to you on the business taxes, because we still gotta actually pay the person to do the taxes. All right, so you're not going to do the taxes. unless you want to learn how to do taxes. Keisha, you know how to do taxes, right? Keisha,
Yes.
you
Remember,
know how
I'm
to do,
driving, so I have to look at the
oh, that's
phone
right, that's right.
to
You
go
know how
to
to do
press
taxes,
unmute.
right?
Yes.
Excellent. So Keisha will be probably, if she's got some time, will probably be one of our tax preparers. So the way that would work is you would get a portion for bringing in the person just for wanting to do the tax, right? So you would get a portion of that. Keisha is also going to get the majority of it for doing the actual taxes. And then a small portion would always remain with the company. All right. So in that regards, it would be 75, 50, 25. So 75 to Keisha doing the individual taxes, let's say a W-2. Let's say you brought that person to do the taxes, but Keisha's doing the taxes, you would get the 25 for the referral and the company would keep the 50. All right. So just for somebody saying, hey, you know somebody do my taxes, and you saying yes, that's just a quick $25 right there. If you do, you could do 3, 4 of those in a day. Just saying, yeah, go here, call this number, go on this website. Any one of those things will land you your referral fee. The person
Nice.
actually doing the taxes, then they get, of course, they got to get the majority of it. All right. So we're creating a network where information is king, knowing who can do what, and that's going to be your bread and butter. Having the website to send them to for more information and to register, that's going to be your quick access key where you don't have to do nothing to get them signed up. All right.
Do you so I would imagine, since we don't have a brick and mortar building right now, either this is a little bit later down the road or this is going to be virtually done.
Right now, we're going to be doing it virtually. I'm doing it right now. I mean, this is constant for me. So I'm doing it virtually. You guys are learning it virtually. So it's actually going to be easier for you guys to do it virtually than it was for me to start doing it virtually from when this whole pandemic thing hit. I literally stopped doing it for like a month till I had to get my head adjusted to talking to people on the phone all day instead of face to face. Because, Marcus, you remember my office, people just in and out, So now it's a little different.
Yeah, I remember.
Yeah, so it's like now it's different because people are like, when am I going to see you? It's like, well, you don't have to see me, That's been like my speech. We're doing things virtually now.
Right. Game changer. Right.
Yeah,
Right.
So I'm trying to get the clients used to that perception. They themselves are getting used to it because they've been having to talk to family on Zoom and all that stuff. So that's making it easier on me. And I don't see things going back to normal anytime soon. Not even by the summertime. I don't see people meeting in offices again like that. So I think that we should settle in, get used to the virtual. And number two, I also feel like doing it virtually, we should be able to see more people and be able to do this more people around the world. Instead of being limited to just our space here, we've got arms that's stretching from New York to Georgia to Pennsylvania to Florida to Alabama to Maryland to, and once we activate the site and everything, you guys are going to be busy as heck because people are going to be literally signing up on the site and it's going to be dispersed to who wants to do the job.
Yeah, I'm just sort of getting the idea. I'm just like imagining what my summer is going to be like. Usually I teach during the summer, but I might be on working and Cover Me, right?
Hey, listen, but the beautiful thing about it is you could be working at Cover Me and doing it from the beach.
Indeed.
As long as you just don't get your laptop wet or get a waterproof laptop. Figure it out.
Right.
We're trying to make life easy and easy as well as profitable and productive.
Indeed.
All right, we gotta have it all.
I gotta have it all, man. Gotta have it all.
So, all right. So now I want you guys to absorb this. What I'm gonna do now, I'm gonna actually work this lady's files, right? I don't know if you guys want to work it with me, maybe virtually or something, but I'm literally going to create her letter. I'm going to email her letters to her creditors and start her 30-day clock. All right, that's remember, same thing I'm telling you now is the exact same thing I'm getting ready to do for her. All right, nothing different.
So you get ready to actually model what we could be ultimately doing.
Yes.
You gonna do that tonight?
No, not tonight. I'm just
Okay.
asking if you guys want to see it. I will be doing it tomorrow to get it out the door by tomorrow night. So when the people come in to open up their computer, rather Monday morning, they'll see her letter and start responding.
How long does it take?
I'll do something better than that. When I create her letter, I'll just email copies to everybody, so you guys can see it in the flesh.
Mm-hmm.
All right. Because other than that, I'm just going to be sitting there typing. There's no point in you guys sitting there doing that. All right. I'll just send you guys copies of that. And then I'm also going to show you, my roster, how I got my roster set up for my clients, all the action points that I take and the timelines. So you guys, if you want to create one similar or maybe even create something better that I can imitate, and roll out. So I'm going to show you what I use. I'm old school, so you guys are into this newfangled computer stuff, and teach me a few things. So I'm open-minded. I'm gonna show you what I got, and you guys can make it better, right? But other than that, I think you guys are doing great. You're definitely grasping this thing. I think we've opened up your minds on some of your own personal situations, even. So take that. I'm about to mute Keisha. Okay. So yeah.
Am I muted? Am I talking?
Yeah, you talking. All right.
No,
so,
I thought I've been trying to get a mute.
That's cool. It's cool. We were enjoying your conversation.
Are we gonna go? Sorry.
Huh?
Are we gonna go over the business tonight?
No. I don't want to keep you guys up all night. We're gonna start the business in the next class.
Okay.
And also I wanna set it up with I wanna invite that lady back to give the PPP overview to the whole group and tell her this is a training session. Keep all the creative stuff out of it. I like her energy, but she's too creative for the group. I want her to keep it on the legal side of things. All right. I want to explain what's going to happen in the business session, guys. You're gonna meet some people, and everybody in business not everybody. Some people like to take shortcuts, right? I will preface that by saying we don't like shortcuts because for some reason shortcuts come back on us. All right. So when you hear these individuals talk, you will know that they know what they're talking about, but you will also know when they're about to take a shortcut. And later on, after that, you will hear me come back and say, but we won't be doing that. Okay. So I am putting out a disclaimer out there because you're gonna, again, I'm not gonna hold anyone's hand through this. This is the real world. This is real business, and you're gonna meet all different types of people. So some I want you to meet is the ones that, yes, I like their philosophy, but I may not like the way they do things. But their information is valid. That's what I want you to take away from it, is the information.
What will they be providing for us?
So one person that I want to invite is the big thing right now that's happening for businesses and that can increase your earning power are the various loan products that's coming down the pipeline from the federal government. The PPP for businesses, mind you, PPP loan, the EIDL loan, the USV loan. Keisha.
Oh, I'm sorry. That's my car.
Okay. All right. So all those loans and stuff coming down, right? These are relatively quick loans to process because they need to jumpstart small businesses and independent business owners. So what we want to do now is we want to help preserve some of our fellow business owners. So whether it's just us walking in or calling them and saying, hey, did you apply for your PPP loan? If not, can we do that for you? And if they say yes, then we send them a package which includes their contract for us doing it, a list of what we need, and then we call them and set up a date to either receive them by email or pick them up in person, whatever we need to do. All right. So, and whatever their amount that they're going for, great. We will also show you how to be able to tell if they qualify for that amount, because some people, they want 100,000, but they might only qualify for 20,000, So we don't want to say, yeah, I can get you 100,000. And we'll never say what we could get you, because at the end of the day, they tell us what they're going to give us. We fill out the paperwork, we provide them with the stats they want, and then they come back and tell us this is how much we can give you. Okay, so it's going to be interesting. What you guys are also going to hear is that many of you may already qualify for this PPP loan process and never took advantage of it because you probably think you didn't. Because many of us have scenarios that we also do, we get a W-2 for, but then we do things on the side that we have to do a Schedule C alongside that W-2. So that Schedule C lists you as a business, even if it's just under your Social Security number. As long as you have to do a Schedule C, you can be a business. So that means that you can technically qualify as a business for these loans as well. But I would not advise you just going to take out a PPP loan unless you intend to really be a business. All right. So I'm looking forward to that. That's going to be a lot of excitement. The only thing I'm kind of regretting is that I am taking you, instead of building you up on your business knowledge, I am literally taking you and starting you up at the top where everything is happening right now, and you're going to end up learning it in reverse. Okay, but that's just because this is a small window of opportunity, and I don't know when it's going to close, and I would love for you guys to make some money in this window of opportunity before it closes. Okay. All right. So on that note, what I'm going to do, I have to set up the next meeting with Fern and that lady and have a talk with her. So I am going to reach out to you guys to see if today is Saturday, Sunday, Monday, Tuesday. You guys think like Tuesday at about 7 might work for the next meeting? Okay, that's one yes.
It's supposed to be snowing, I think Tuesday, like full snowing. Anytime in that day is pretty, I think. You'll probably
you ain't going nowhere.
Yeah, you probably catch everybody on.
Yeah. All right, good. Keith,
I don't even, they just canceled my they just canceled my flight to DC because of the snow. So
okay.
I'm just kind of on standby, just waiting. So
all right, let's do it
I'm definitely gonna try. I just don't know. Yeah.
All right, so tentatively Tuesday at 7. That gives me time to reach out to everybody and have that conversation and set that up. All right. If anything changes, I'll reach out to the group and let you guys know. So on that note, great meeting, guys. I hope that you guys have any questions on dealing with a personal client. Any questions like this is just credit cards. Loans are different. We're gonna have a loan segment. All right, how to deal with loans. But this right here, I think you guys are fully armed and equipped to deal with credit cards right now, because that's the easiest level of credit to clear up. All right. So, and most people, their debts are all credit cards. So this will give you the majority of the people, the majority of the work, and that's stuff that you can get started on right now. I will put together the compensation sheets next and send that out to everybody so we know how to expect to get paid. And I need to have a a web development meeting with Dion and you guys, Marcus, and I need to make a final decision on the website because now that's what we're waiting on. So I need to meet with that, but we're moving pretty fast, and I think that we are ready to go, guys. So thank you again. Great meeting, and I will see you guys Tuesday at 7.
Hey,
And most of you I'll be talking to way before that.
hey, Andy, real quick. I'm sorry.
Yes.
So this is a credit question, but brother Marcus has a question. So go ahead, brother Marcus. You may have something more important. This is just based on a credit tactic that we were dealing with in the last class.
Yeah.
You had a question, Marcus?
Oh no. I had missed the last class. Due to I had to take care of a whole bunch of business. Yeah.
Okay. I'll send you links. Don't you get the links?
Yeah. I think I'm gonna go check that link out.
Yeah, do that. You see all the videos.
Yeah.
Okay.
All right.
What was it, Brother
Okay.
Kenyatta?
All right, and Keisha, you were involved in this discussion, this sub discussion that we had, and I remember when Andy dropped this jewel, like we were all excited, like oh, and then you brought up a critical point that had to be considered in this process. So let me go back and deal with that real quick. All right.
Is this about the mortgage?
Yes.
Uh-huh.
Yes. Okay, so because I was like, okay, I was like, maybe we should, entertain the idea of paying our mortgage using our credit card, because then we get 2 double hits as long as you positive hits. That is, as long as you pay before the closing date,
Right.
closing date, okay. But then, but there was a critical point that was made. I want to make sure that
she said that her mortgage company does not accept credit cards for her mortgage payment.
And I was also saying my sister works for a mortgage company as well. And her mortgage company doesn't do it. No mortgage company I've ever had, and I've had several mortgages, have ever accepted a credit card company. Have ever accepted a credit card payment. And the reason that it's been explained to me that they don't do that is because they don't allow you to pay their debt by incurring another debt. So the credit card bill, the credit card is a bill. So by you using, it's like robbing Peter to pay Paul type thing.
Right.
And she also gave you a workaround, which was if you wanted to take the cash off your card and put it in your bank account and then pay off your card when that's due, it would be the same as using your card to pay your mortgage.
Okay, but then we have to.
I didn't say take the cash off the card, because
what were you saying?
Cash advance.
Yeah, you do it if you do a cash advance, as long as you pay it back the same way, you're still not getting taxed.
Well, with cash advance, they start charging interest the day you take the cash out, and it's higher.
On all cards, or which card are you talking about? Because some cards, on my card, I have one card where I take a cash advance and I still have my same window.
Yeah, okay, so you definitely need to look at that. What I was sharing, what you're thinking about, is what I said about the when you have cash back. And so when you have cash back and you're just using that same card throughout the year to make all of your transactions,
right,
and you're paying all of your transactions off, that can be your Christmas free money. So that can be the money that you use to make your Christmas or Christmas purchases. Exactly, because it's free money.
Right, based on award points, and all of the incentives and
which card you have.
Which card?
It has to be you need a cash reward card. And keep in mind, cash reward cards tend to have higher interest rates. But if you're paying it, if your sole purpose of using it is to not have a balance. You don't want to carry a balance. Exactly. Because if you're carrying a balance, you're negating, because let's say the interest rate is 18%. and all you're getting back is 2% on what you charge. That doesn't make any sense. You didn't win there.
Right.
So in order for you to win, you have to pay off all of your purchases, just like so instead of using cash for incidences that you would normally use, you have to use the card. And I will say this, and it takes a strong discipline, because it's like, I may have, and this is no lie, I may have $10,000 in my account and it looks good, but I know that $10,000 on this date goes to that credit card company because I've charged all of this.
Gotcha.
So it's like, dang, I gotta write you a check for $10,000 when all you really asked me for is $150. But you have to have that discipline to write that too, because that's not my money. I just allowed it to sit in my account. I allowed it to sit in my savings and accrue interest. You feel me?
Yeah.
I allowed it to accrue interest while I had it, and then I gave it to you when it was due. So I kept my money longer, which is just like what Uncle Sam does. That's how when people get refunds, it's just because you paid too much money, and so they were accruing interest on your money instead of your money accruing interest for you. It accrued interest for them.
I see. Okay, so so this is very good. Okay, this is
Also keep in mind, you're a homeowner. As a homeowner, you also have your electric bill, right?
Oh yeah, I pay every.
Most people,
everybody has electric bill, right?
yeah, but most people pay that through their checking account.
right.
Oh no, I use my credit card.
You don't use your checking account.
Right, use your credit card. Everything.
Okay, okay. So really, I see two strategies. I see what you're saying, Sister Keisha, in the sense that if you're going to do the mortgage, you need to make sure you do an interest rate analysis and really make sure that it's worth going at, and also just understand what you're taking on. If you're not machine-like about it, you can get caught up. Dig it. All right.
No, that's not what I said. What I said my mortgage company doesn't allow me to do it. So if your mortgage company allows you to do it, then you would be paying your mortgage anyway. So use your card to swipe the payment. And if it's easier for you, as soon as you do that, then take the cash out of your account and pay your credit card.
Yep.
Okay.
So that might
That's
be easier
if it
for
allows
you. Right. And that may be
Get those
easier
frequent
than
flyer
you.
mileage.
Right. Some people do frequent flyer miles.
Mhm.
I prefer the because I like to get a free Louis bag.
Louis
I
bag
like
every
to
year.
get right,
I remember that.
exactly. I like to get a free. I'm serious. I like to get a free Christian Louboutin pair of sneakers. Like, how you get that? Oh, my rewards.
Yeah. So I mean, so sister, I hear I got two messages there. I mean, like, so one, right, you got to look at the situation, because your mortgage institution may not even allow you to even do that. Point one, got that. Okay, check off. Point two is, if you decide to do this, you really need to pay attention to, because it may not be worth it, because it may end up costing you more to even try to take the cash off and try to do this, go through that whole process. It may end up costing you more so in the long run. Or,
it's always gonna cost you more if you're not paying your bill. This you don't play this game unless you're willing to pay it.
What she's saying, Kenyatta, is no matter what you do, you have to commit to paying your bill down to zero.
I dig. I got it. Overstood. I got it. Okay. Now, but Brother Andy, you so when you gave us that jewel when we was damn near flat, and you were talking about two, you was like, there's one major credit card you use.
Right.
But it was a ping pong effect. It was like,
yeah,
okay.
Yeah. Okay. So you got your main credit card, right?
Yep.
Let's say you got $5,000 limit on that card.
Yep.
You got your secondary card. Let's say you got $3,000 limit on that card.
Yep.
So, and then let's say your monthly take home and what you're willing to pay max in your total spending for the month, not your card, but I'm talking about your total household spending for the month.
Yep.
Averages $4,000.
Yep.
Right?
Yep.
And let's say you take home, your take home for the month 5,000. So it's over your spending, right? So you're secure with that.
Got
You
you.
know
Yep.
you're within your limits.
Got you. Yep.
That entire month spending of $4,000, if you can fit it on that one card, fit it all on that one card with the $5,000 limit.
Yep.
Okay.
Yep.
When it's due to be paid, you stop using that card, you pay the bill, and you take out the second card. Because that card that you just paid, it needs to reset. And it's going to take about 4 or 5 days past your due date to reset. Remember, Keisha said the closing date?
Yep.
Okay, on that date is actually your closing date to send off your status to the credit bureau.
Right. Yep.
But then there's your due date, which is the actual credit company's date to close out your account and call it late or paid on time, one or the
Yep.
other.
Yep.
And then after your due date is your grace period. At the
Yep.
end of that grace period, your account is now late.
Yep.
Okay. So that period right there, you know, you have to give it that period to go through that reporting process, report to your credit bureau. During those 4 or 5 days downtime is when you go to your secondary card to do whatever you need to do. So you've paid off your primary card. It's sitting now resting. You're using your next card. When your primary card comes back into play, you pay off your secondary card and let that rest back up till you use up your primary again. You see
Okay.
the cycle?
Yeah. Yeah. It's like so yes, you really have to be conscious of the time variable, and you have to be mechanical as well. But the idea is that if you know that you're dealing with $4,000 of all expenses, throw it on credit card number one, so that you can create that awesome payment history.
Right.
And then so you got to be aware of credit card number one's closing date, so that you can make sure that you take credit card number two and pay off credit card number one
And utilize credit card number two.
by credit card number one's closing date. And so then I would imagine, so then once you've paid credit card number one off with credit card number two, you got to
oh, time out. I did not say use credit card number two to pay one.
Okay. Okay. So we just gonna take our income, like our cash.
Yeah, because other than that, you would have been using your cash to make all these payments anyway, right?
Right. So then we could just do a cycle around with cash and credit card number one.
Yes. My term is you use it same as cash. You don't buy anything you can't afford to pay off within that cycle.
Yep. Yep. Okay.
You get it?
Yep. And then credit card number two is
that's just your backup for your downtime on card one.
Your downtown during the time that it's resetting.
Yep. Exactly.
Okay, I'm gonna actually play around. When I say play around, I don't mean like
yeah.
But I'm actually,
I want you guys to do this.
I'm gonna actually list this out and go and look up the closing date. That was a jewel dropper too. And look at that, identify that, and choose an amount, let's say $4,000 of household spending. Take one of our credit cards and look at that and see what that could potentially look at.
I'm gonna give you a better practice, or a better scenario, right? How many credit cards do you have now in your wallet that you're actively using?
I have one business credit card. I have one business credit card and one personal credit card.
Okay. Your personal credit card, do you carry a balance on that?
No, it was, but we just paid it off. We did some sort of thing where it was like, same as cash type thing, and took all the debt and paid it all off, and now it's all paid off now.
Okay. So now that's a great starting point. So what you need to do is to consider that card cash, right?
Yep.
Every time you're about to go buy something, you say, how much am I going to spend today? If you say $100, $200, $300, you take that $300 out your wallet, put it in your drawer, and grab your credit card and go spend the $300 on your credit card.
Yep.
Okay? The
Yep.
next day you need to spend 100, you take that 100 out your wallet, put it in the drawer with the 300. Go spend that 100 on your credit card.
Right. Right. Until you reach whatever limit or whatever amount you're going to do.
Till you run out of cash. When you run out of cash, you're done. Just because you got room on the card, you won't have room to pay it come the end of the month.
That's cool. I dig the practice. I dig.
You see what I'm saying?
Yeah.
These are just ways to train yourself to curb your appetite.
I see. I dig. Yeah, because this is really a game of mind power, like
Yes.
willpower and mind power, right?
Yes.
The discipline. So if you
It's
get
discipline. If you love having money, the discipline part is easy. Keisha and I love money.
right.
So the discipline is easy for
You
us.
love money, Keisha, right?
What? Keisha, talk to this man.
You don't even know.
He in the wrong club, Keisha. If he don't like money.
Right. Mm.
I'm telling you, man.
Yeah, but this
if
is
there's
like
a way to save and a way to make it, we gonna find it.
Yeah. This is a science. This is
Yeah.
a science. And
It
I
is.
mean, and that's the whole. That's the whole thing about credit, right? I mean, like that's what they're capitalizing on your emotion. If you're an emotional spender,
Yes,
and you're not a scientific spender,
that's right.
Yeah, that's how they make money. So
It's called impulse spending.
Yeah.
Most purchases are bought under impulse spending than under need spending.
Yeah, for sure. So okay, all right, okay, good. I just was just cycling back, man, because I just remember you just really giving us that, and like I said, I was
Absolutely.
already into this thing, when I was breaking down this credit card millionaire thing, and I was just like, man, I was like, because the way that you was doing it was like 3-4 hits. It was like a bing, 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 bing. It was like if you paid it, you do this and do this and do this, and you did it. And it was almost like credit leveraging. It was like,
That's exactly what you're doing. And by knowing your timing on your cards and on your payments and timing it and knowing the effects of what you pay and how much you pay, when you pay it, all those factors, when you can time all that stuff right, you're going to see some miraculous happenings.
Okay. I'm gonna cut it off there. I ain't trying to keep my brethren and sister in.
Hey man, we're here.
Yeah, but no, but good though. But thank you all. Yeah, so
Right.
we'll chop it up some more about it. But
Absolutely. You know I'm here.
All
Ladies and gentlemen, as always, it's been a great meeting, and I will see you on the next round Tuesday at 7.
Tuesday at 7.
Yes, indeed.
All
Key,
right.
we'll talk before that, and everybody else, I'm sure we'll talk before that.
Indeed.
All right. Good night, everybody.
Hey, Andy,
Yeah.
Andy, can you call me as soon as you hang up? I want to tell you something real quick.
Okay, sure.
Okay, all right, good night, everyone.
All right. Good night, everybody. All right. Peace.
Later, guys.